Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. The dollar has lost 98% of its purchasing power due to hyperinflation, rapidly pumping out dollars into a system that's trying to get ourselves out of debt by replacing it with more debt. That's never going to work. The dollar is going to be devalued, worthless. It's going to collapse. Now, this article explains what's going on, and I want to make this video to basically make people aware of the situation, because a lot of people don't even know the reality of our financial situation. And gold and silver are definitely the smartest alternatives. And I say an alternative because there is no solution. But gold and silver have been used as money for over 6,000 years. No other currency, fiat, anything has been that successful. Actually, fiat currency is a baby, a newborn baby, compared to gold and silver and how long they've been used as a tradable exchange of value. But anyways, the link to this article will be in the description. I like how blunt and how clear he puts things into perspective. And hopefully by the end of this video, you will have a better understanding of why it's so important to invest into precious metals. So it starts off to say most people understand the dollar isn't actually worth anything. And I'd beg to differ. I think a lot of people actually don't even realize how valueless it is. It's just paper that's backed by the word of the U.S. government and nothing else. And this is because our money is not used anymore with backing of precious metals. Back in the day, our money was backed by gold and silver, but nowadays our money is not anymore. It's legal tender, or was, and now a dollar is basically a promissory note saying that this dollar is worth this much, but it's backed by faith, and that's all. But the cold hard reality is the United States really doesn't deserve that kind of credit. We're actually $23 trillion in debt. If you go to usdebtclock.org, it shows a live counter of our situation, and it's all in the red. Anyways, for one thing, our government has accrued a massive amount of debt that it clearly does not intend to pay. The U.S. budget deficit grew to $866.8 billion in the first 10 years of the fiscal year, up 27% from the same period a year earlier. That's wider than last year's fiscal $779 billion shortfall. That puts us on track to sail past the 1 trillion mark by the end of the year's end. And we aren't even in a recession yet. The market right now is panicking over recession indicators, but the economy itself has yet to really deteriorate, which is definitely true. That kind of falls apart later, especially in the U.S., as we're one of the more rich economies. And that makes us all of the spending and the government's indulged during good times look all the dumber. Don't say I didn't warn you. Here's what I wrote back in November 2016 when Donald Trump won the election. The national debt is going to vastly expand under Donald Trump. This is Donald Trump's plan. Drastically reduce taxes on corporations and the wealthiest people in the country. Spend big on infrastructure and border walls. Add more than $5 trillion to the national debt and neither print enough money to pay it off or convince creditors to take less than what they're owed. Sure enough, that's what happened. The Tax Cuts and Jobs Act has been the biggest contributor to our growing debt burden since Trump signed into law in 2017. It alone increased the national debt by $1.8 trillion. But that's not all. Donald Trump and the Republicans aren't the only ones responsible for this mess. The budget deal that brokered the Democrats earlier this year showed the American debt accumulation is a bipartisan endeavor. That deal was essentially a compromise in which everyone got what they wanted. It suspended the debt ceilings through July 2021, raised domestic and military spending more than $320 billion over the next 2 fiscal years, and will ultimately add $2 trillion in debt over the next decade. Make no mistake, U.S. government has vastly overextended itself. The government, or the taxpayer, spent $4.4 trillion on financing costs over the past decade. That's just interest. It didn't even begin to pay the burden down. We're going to be carrying trillion-dollar deficits for years, going forwards at $22.3 trillion, and now it's at over $23 trillion. The country's collective debt is already 101% of the GDP. Again, that's before any kind of recession contracts our economy. And I'll tell you something else. Other countries are catching on. They see this. They also see the world's preeminent economic power slapping political rivals and punitive sanctions, denying them access to money markets, imposing tariffs, investigating trade wars, and ultimately exploiting the dollar's role as key global currencies reserves are every conceivable turn. and they're backing away from it. The dollar is attracting only in comparison to other failing currencies, but Russia, China, and other emerging economies in Latin America and the Middle East have made it clear they're not content to settle for that. So they know that our dollars aren't even worth what you'd be trading or buying or selling for. And they're doing everything they can to cut the dollar out of their trade dealings. They're engaging in currency swaps and stockpiling gold. Interesting. It's also interesting how central banks have so much gold as well, and silver, when gold and silver isn't even used as our money anymore. So why would a bank be hoarding gold and silver? It's almost like they know something that other people don't. Worldwide central banks purchase surged 70% in the first quarter of 2019, hitting their highest levels since 2013. They know it's coming. More spending and more rate cuts. The dollar is about to get smashed. So I'm going to give you the same advice I gave you in 2016. Buy gold. That's what everyone else is doing. It's why gold is suddenly back over $1,500 per ounce and shooting even higher. Fact. And then he goes into his thing, but I'm not going to go into that. But it's an interesting article. Very interesting article. Because we have a lot to talk about. The first is how people could see that banks and governments, or the feds, which is separate from the government, is overspending. And they're like, oh, we can just print more money. But the thing is, if you print more money, then you're oversaturating the market. And they even said that other countries are catching on. So it's only based off of faith and value. But if people are losing faith, then what is the value? It's like this. If you have $50,000 in cash, well, let's say $100,000 in cash, okay? And you wanted to invest $50,000 into two different things. Or let's say, one, you kept the $50,000 in your bank account, and you put the other $50,000 into gold and silver. Over time, let's say in 20 years, the $50,000 you have in your bank account, what you can buy with that, maybe a couple of Teslas, whatever it is, would have drastically decreased. Maybe you only can buy one Tesla instead of 4. But with gold and silver, the $50,000 not only will have held its value because silver has an intrinsic value, but also the value of those coins would also be appreciating. I mean, look at what pandas appreciate. They quadruple their price within 3-4 years span. So that $50,000 would more likely turn into 70, 80, 90,000 depending on which types of silver you invested into, instead of the 50,000 in your bank account that's losing its value more and more every year. So that's something to think about. With our money, they don't want people to invest into precious metals, because if you're in debt, then you're a slave to the system. They have control over you. It's all about control. That's why they're going to be pushing stocks and things that are pegged to fiat currency. That's why I always say stock markets, I invest into some stocks myself, but the whole point of stocks is still pledged around the dollar. And if the dollar is deflating or is collapsing, then what's the point of investing into a failing art? It's not like, okay, so ETFs are a different ballgame because that is technically gold and silver. ETFs, or exchange traded funds, is the physical or the paper way to invest into precious metals. I still think owning physical bullion is the smartest, because if you can't hold it, then you don't own it. And that's really important to know. That's the saying of the stackers. That's the saying in the world of precious metals. If you can't hold it, you don't own it. Because what if there's a power outage, or what if you need to barter, or what if things do get worse, or what if the recession does happen or is looming around? You need to have something to show for, and gold and silver are the best exchangeable, interchangeable, thing to trade. So I hope you guys got the whole point of this video, that you need to be doing something, because at least if you're watching this video and you watched and you read this article with me, then you at least have an option. Most people don't even have a choice. They don't even know about this stuff, but at least you have a choice, and you can actually take an alternative route instead of just keeping your money in in your hands, letting it burn before your eyes. You can invest into precious metals, which will in return preserve your wealth against inflation. So anyways, thank you guys so much for tuning into this video. If you did enjoy this video, make sure to smash that like button. Also, make sure you subscribe if you're new. Check out my video I posted earlier today talking about the bull market for silver in 2020. A lot of good things, a lot of potential going into this. And this is not only just about, the dollar collapsing, but silver and gold have a lot of value and potential, especially with the Iran tensions happening, with the dollar index lowering, with so many other things, the Hong Kong protests and US-China trade wars. So you need to be in on this. You need to take charge, take action. So I hope you guys do. Keep stacking, my friends. This was Silver Slayer. Thanks for tuning in. See you guys soon. Peace.